Hi, and welcome to our Venture and Capital interview series. Today, I'm joined by Vincent Lu, the partner at BMYG. Welcome, Vincent.
Hi, Steve. Thanks for having me.
Mate, very pumped about today's discussion. We're discussing all things secondary sales, and this sort of come about is recently we saw that you guys were featured for your recent deal with Klarna in the US, which was a significant transaction. And it's brought up a whole bunch of questions that I want to share with the audience and with our sort of subscribers, because I think it does provide an interesting opportunity for investors going forward. And you guys have obviously proved that with two very substantial deals now. So firstly, let's kick off a bit of a background on BMYG for those who may have been hiding under a rock and haven't sort of come across you guys. Can you give a bit of a background to yourself and BMYG?
Yeah, sure. So BMYG is a asset management group with a headquarters in Melbourne, and now we have office in Melbourne, Sydney, Hong Kong. And currently, we have a funds under management of around $500 million. So we are predominantly focused on the unlisted equity investment side. So we are managing a few different strategies. For example, pre-IPO and IPO opportunity fund focused on Australian market, and also we have private equity venture capital funds. But more importantly, very recently, we are focusing more on the secondary side, building exposure to some of the great technology business on a global stage.
Now, let's kick off with first, because I know this was a popular question when we sort of launched our first secondary sale transaction. What is a secondary sale transaction?
Yep. So essentially, it's just like buying and selling shares, but the difference the difference from the public market is we are buying the shares in a company that is unlisted, that is still private. So it used to be a very niche market, but now with all the success in the IPO market, and the investor find extremely difficult to get allocation during the IPO stage. A lot more investors started to moving a bit earlier, so trying to build exposure to these mature late stage venture capitals. Typically, so it will be very difficult to get allocation in the primary round as well. So now there's a market where allow investor to purchase shares from early stage existing investor, so new investor can get on the journey with the company, but also at the same time allow early stage investor to realize a part of their early investment.
So to give some context about the types of transactions you're talking about, let's go through the two ones that you're sort of most known for, Airbnb and Klarna. Do you want to just give some perspective on those two transactions? And then I want to break down your thesis, your philosophy, and how you approach them. So kicking off, breakdown of the Klarna and Airbnb transactions.
Yeah. So I think these two business, they have a lot of similarities. They are both industry leaders in their own space. Great technology business, both with global potentials in terms of market potentials, and so obviously Airbnb. Household brand names, everyone understands it. So they build a platform, allow landlords to rent spare properties on the market, and also allow travelers to get a different experience during their trip in a foreign countries or different cities.
And while you talk about that, people may be thinking, coming towards the end of the COVID, thinking, well, that sounds like an insane investment after what we've gone through with COVID. And that transaction was done from memory, sort of late 2019 or early 2020.
Yeah.
And crazily enough, Airbnb is obviously performed incredibly well, sort of post as well.
Yeah. So COVID. So when we look back, actually, COVID affect the entire economy and the entire traveling industry, right? And if you look at Airbnb's model compared to traditional hotels operations, so they are, first of all, they are capital light business model. So that gives them a lot more flexibility to manage extreme downturn. And also, but to be honest, during the early stage of COVID, when the entire global economy basically was shut down, we do feel a bit worried initially. But history told us that every great business, every industry leaders, once they go through the economic cycle, especially going through a crisis, usually they came out on the other side a lot stronger. So that's actually what Airbnb has approved. So first of all, they, as I mentioned, their capital light business model. So it will be a lot easier for them to manage their cash flow compared to traditional hotels. But at the same time, because they are truly the global leaders in their sectors, even during the COVID, investors still support the business. They raised the round during the COVID. So that gives them a lot of buffer to manage, all the difficult situations during the COVID. And then with all the global economy, the central banks is basically printing cash into the market. The valuation goes up when Airbnb hits on the IPO market. Investor is really supported, and now with the global economy gradually open up. So we believe Airbnb might benefit in the few years to come.
Yeah, and if you look at both Airbnb and you look at Klarna, obviously they're two businesses that really do target the sort of millennial and sort of Gen Z generations, which were obviously ones that benefited from that. And obviously in the last 2 years, we've seen the onslaught of retail traders that are basically millennials and sort of Gen Z as well, both through Robinhood and in Australia, through the likes of Self-Wealth, Superhero, and etc. So it's interesting for me when you're breaking down the types of businesses you're looking at. You mentioned about industry leaders. They've obviously got very, very high profile brands, but also they're in Klarna, it's B2B to C, but still sort of technically B2C type models. And I find that interesting from your approach. Do you have some perspective about how much, I suppose the growth or the how much bigger that sort of influence the Gen Zs and millennials will have over the next sort of 5 to 10 years?
Yes, because I think so. Because I think a great successful business will focus their products on the group of customer that have the most purchase powers, right? So essentially, so what Klarna does, obviously, in the very beginning, they focused on Gen Z, this millennial, young people who is more willing to adopt new technologies. But at the same time, if you look at how their product evolves, just from the credit limit perspective, if you become a loyal customer and if you're showing really good credit records, they gradually increase your purchase limits. So that will give their the best of their users more purchase power down the track. And that's something I think would be very interesting, because once this generation of young people, they get their job, they have more money to spend. So essentially, buy now pay later become a brand that is deep in their shopping behaviors. So every time they want to do something, so it doesn't matter they have enough cash or not, they might first of all think of Klarna, Afterpay as a brand to choose to use first. So gradually that will become a trend that buy now pay later will take up a lot more market shares from traditional like credit cards or other consumer credit solutions. So that's also one of the major factor of our conclusion that when we invested in Klarna, even though the industry now is a huge industry now, but we still think the industry, buy now pay later industry as a whole, has a lot more room to grow. So they will become, because our conviction is that buy now pay later will become a mainstream payment solution down the track, probably on the same weight as a credit cards or any other consumer credit solution.
It's really interesting. You can see it coming through now in the business markets as well, where people coming up with more and more variants for businesses. I'm curious with your investor hat on. Obviously, we're always, from an investment side, we're always looking, and no matter what the transaction is, we're always looking at what is the risk and what is the upside return. And obviously, secondaries has its own little sort of niche in that. And from the way it sounds like you're targeting, and sorry, one of the element that I sort of forgot to mention was that you're focused on companies which are pretty much on the IPO path, if I can get that right. How do you look at the risk of these types of transactions versus the potential reward?
So I think so because every transaction we look at, basically it doesn't matter it's a secondary or it's a primary round. We look at basically the same broad aspects. So first of all, the technology and the growth, but on the secondary side, the structure of the deals and the legal due diligence might play a much bigger roles. So because in most of the cases, investor is actually pretty comfortable in terms of the technology the business is developing, just like Airbnb, Klarna. They basically proved their business model already, and the consumer has shown very positive reception in terms of adopting their service or products. But more importantly is whether this transaction is clean, if there's any counterparty risks involved, and also what is the valuation we are comfortable with. So currently in the secondary market, it's not like in the public market, there's one place you can find the most transparent transaction data. So basically you need to work with trustworthy parties to make sure that the valuation we get into is still give us a lot more room to grow, for capital to grow in the future. But at the same time, the structure is clean. Investor won't face counterparty risks. There won't be any settlement risks down the track.
And I suppose that you bring up another point is that the two parts of this type of deal that are difficult is that firstly, how do you get access to them? And then secondly, how do you know that the shares are there on the other side? Because I found that, over the years, a lot of different people have sort of pitched us on sort of you, and it's like, I really don't know them. I really don't know them at all. And so to give some context, how does BMYG go about that sort of due diligence process? And what is typically what sort of time does it take to go through that?
Yeah, so as I mentioned, we were focused. So basically, our due diligence will be focused quite heavily on the legal side. So we work with large law firms to go through all the key transaction documents that were including the proof that the seller actually has the shares they claim they have. And also what is the policy, the shareholder agreements of the company we are trying to invest. So what is the share transfer process? If there's any uncertainty down the track, that will be an issue for us to, for the shares to be transferred into our funds smoothly. So we will have lawyers to review all these data to make sure that the transaction itself, the structure is very clean. I think that is a very important part of a secondary transaction, and also on the valuation side, because it's sometimes because it's not like public company, so the company, the corporate capitalization is very transparent. So because that essentially determines what sort of valuation you are getting to. So because we will spend a lot of time to make sure we understand fully of the corporate structures or corporate capitalization of the company we are investing.
And then I imagine once you understand that, then the next process is understanding the different metrics of the business. And so I'm just curious, as far as when you're looking for investment opportunities, what are the key metrics that you're looking for, even though they are industry leaders, even though they are high profile brands, etc. So obviously invest the substantial, and to give some context, like we're talking, sort of 8-figure investments that you sort of known to be investing. I think Klarna was 20 million and similar. Like you can obviously tell the numbers. What are the metrics that you're looking for in those companies as far as growth rates, adoption, etc.?
Yeah. So first of all, is the product and the technology itself. So we will not only just to review the material available and provided by the company, we will also engage a third-party technical experts to give us independent feedback as well. So in terms of the market potential of that technology, what might be the feedback from their target customers. And also valuation, as I mentioned, valuation is quite important. So we will basically look at all the relevant comparable companies and see if we can get a valuation discount and what sort of valuation we might expect where the company lists, and what sort of expect the investment returns we should have on our mind. And also because we will basically assess the overall market environment, especially on the IPO market, whether the sentiment of that particular market is still optimistic or pessimistic.
Yeah.
So that's quite important.
Which is always a hard one, right? You've got the business can be going well, but timing is always a key when it comes to financial markets.
Yeah. And most importantly, I think, just from a thematic perspective, so we are trying to focus more on business with an ESG focus, because I think if the business prove that they're doing really good job on the ESG front, not only it works well with their target customer, a lot of customer it will accept a brand with an ESG focus, and also capital markets will actually tend to back ESG focused company more. And also from another perspective, because the environment is actually a huge issue now. So we believe that by investing into the right technology, right business model, if that company can actually do their part and help us to solve the environmental issues, it's not only the right thing to do, but if you're doing the right thing and you have managed to do it, so there's a lot of money to be made. So
yeah,
ESG will be a huge focus as well.
So I'm a big fan of, like, obviously we've worked with a lot of great, and interesting renewable energy tech companies. And if you think about it, that renewable energy infrastructure, there's been trillions of dollars spent on on the energy infrastructure. And to me, there's so many different opportunities for disruption in that space. And you've got two factors of the investment's already being spent in the infrastructure, and then there's a whole bunch of assets that have that potential where if the technology is there, you've got that opportunity to turn those assets into electricity producers. And then out of that, new business models get created, new opportunities get created, etc. And you can see how over the next sort of 10 to 20 years, that whole area is just prime for disruption. And that's exciting. And then same with, you go look at, even I was watching a video where they were talking about the dairy industry, how in the next sort of 10 years, the dairy industry will be made obsolete just simply because of innovation, because they figured out, if you look at all the different ingredients that goes into milk, as an example, only 3% of it needs to be disrupted. And that's not that difficult for them to do. And I find that quite interesting. And likewise, when they're talking about beef industry and sort of poultry and so forth, likewise, so it's only a tiny percentage that actually needs to be disrupted. And you can see some of those trends that are coming through both in energy, food production, agriculture techniques, agri-tech as an area itself, which makes it incredibly exciting.
Yeah, because I actually heard a story, because when we were looking at a dairy assets way back. So essentially what I mentioned to us is if a cow works more, so the cow will be healthier, but it will be less milk they produce. So it's not right. So because you need to look after, it doesn't matter. Obviously, on one hand, it's the productivity of those cow assets, but also animal is life as well. Yeah. So that actually become a global food supply issues. We are not producing the food very efficiently, and currently we don't have enough food to supply the population around the globe. So I guess the technology, for example, some plant-based meat company, what they are doing, and also some, some man-made meal company, what they are doing could be a great solutions
Yeah.
for the generations to come.
And you'll find that, typically with this sort of like innovative technologies, typically it takes that, they've got that sort of early adopter period, but when the mass adoption takes place, that's obviously when you see, outsized investment returns. And we've seen that with companies obviously like Tesla, as an example, and even electric vehicles and other companies, ASX listed companies like Novonix as an example, where now it's becoming more mainstream and it's right in that sort of, that S adoption curve, it's right in that space where it's moving into the sort of mass adoption. Actually, crypto is the other area so that mass adoption is taking place. So, so look, Vincent, as a next step for you, what other things are you on the lookout are you on the lookout for with secondary trend or US based companies in the secondaries area? And what sort of themes will you be focusing on in that area as well, outside of the ESG focus?
Yeah, because I think ESG focus is a very broad theme, right? But there's a
Correct.
lot of different avenue investor can choose to actually to get to that target, to get to that goal. For example, if we want to focus more on the food technologies to produce the food a more efficient way, and also in a more environmentally friendly way. So that actually, will help us to do our part to do something for the environment, to protect the environment, and also, for example, some renewable energies, healthcare technologies. So I think this will be broadly on some industry, some broad theme we're going to focus on for our next secondary transactions. But on top of this, we will still focus on the true industry leader who has already demonstrated they can develop great technology and they can market their technology to their target users. They have proven track records to grow the business, and there's a visible pathway for them to actually do IPO within the next maybe 1 to 2 months. 1 to 2 years. So these will be the key criteria when we select our next secondary transactions.
Fantastic. And Vincent, as just to finish up, I'd love to say congrats to you and the BMYG team, because if you think about your last 12 months, you've obviously had Airtasker, which was an investee company of yours, go to ASX listing sort of earlier this year. You've obviously Open Markets is on that track as well to go to a listing at some stage over the next, I imagine, sort of 12 to 24 months. You've had the trade sale of ASX 400, which was one of your investee companies. Obviously, Airbnb went through their exit as well, and then obviously the crossing of the $500 million of assets under management milestone is obviously a fantastic milestone to achieve. So I've obviously known you guys for a very long time. I'm proud to have you guys as shareholders. So congrats to you and your team on all those milestones achieved over the last 12 months.
Thanks very much, Steve.